Welcome back. Up next is Forum Daily's Market Update with Catherine Murray. Catherine is the host of the Buck Stops Here, and she joins us now. Take it away, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your weekly market recap. I am Catherine Murray. Well, it has been an absolutely dizzying week in the markets, and I don't think I've ever actually said that. So let me give you a little bit of background as to why we are seeing markets that are very, very volatile. Markets are down by about 1 to 2% today across the board, but this follows a sharp rally yesterday, which followed a down market, a sell-off on Tuesday. So these markets are really just moving and moving quite violently on the back of the Russia-Ukraine headlines, as well, of course, energy, oil prices that have been skyrocketing, and of course, inflation numbers out of the United States that hit a 4-decade high this morning. So a lot of moving pieces and parts to the markets today. We are seeing in the marketplace today tech stocks in the States, as well as banks and growth stocks trading lower. Energy and materials, however, are outperforming. We are also seeing the U.S. 10-year yield move above that 2% mark. So that's also a bit of a concern for markets, particularly the higher growth and higher multiple stocks. That's why you're seeing some outside pressure on those tech shares today. We're also, of course, seeing the higher interest rate environment in the United States help the US dollar versus the Canadian dollar. Geopolitical tensions absolutely front and center for investor concerns, inflation concerns as well. Those are the key headwinds to the overall market. US inflation reading, as I mentioned, is a 4-decade high at 7.9%. Gas prices, of course, leading the inflation reading, and also, of course, leading to concerns that that will cause demand destruction, that the US consumer, the Canadian consumer will really only have to spend will only be able to spend their money on gas and food, less so on other discretionary items. And then that would lead to a lower growth environment, which of course puts pressure on the multiples of many stocks within the equity markets. So again, that's why the markets are trading lower. Having said that, why did they rally the other day? Hopes that perhaps we will see some type of off ramp for Putin in the Ukraine, Russia geopolitical tension, but that is not the case today. No progress apparently has been made. And again, that's why we're seeing a bit of a sell-off today. Away from that, we also have to contend with the U.S. Federal Reserve meeting coming up that on March the 16th, that they will likely raise rates to try to combat inflation. But then, of course, that leads to concerns that they might have a policy misstep and actually cause a recession. So a lot to digest in the marketplace for sure. As it relates to the TSX, we are seeing the TSX trade lower today, but it was higher yesterday, up by 1.2%. Today, we are seeing energy as well as materials move higher. Tech shares in Canada trading lower, like we're seeing in the United States. No major economic data in Canada today, but what to watch for is tomorrow. We will have the Canadian jobs report. 125,000 gain for February is expected. That's the consensus number. 200,000 loss was the number in January. So let's see if we can reverse those losses. And we are expecting the unemployment rate to tick down to 6.3% from 6.5%. As it relates to stocks to watch, I'd really just mention one, and that is Amazon. They did announce a 20-for-1 stock split. That means that you can buy Amazon at a cheaper price when the stock splits. And then just wrapping it up here with respect to the markets and what to watch for. On the bullish side, one of the reasons why, of course, the market was moving higher yesterday is because of the view that we've seen oversold conditions and that these companies are still very much intact and won't see demand destruction, and that they will be able to pass on the higher prices. So that's the bullish side of the story. But again, we really do have to contend with the Russia-Ukraine crisis moving the markets in a volatile fashion. And having said that, important to note that Goldman Sachs as well as Rio are the latest high-profile companies to move out of Russia. Nima, I will leave it there. Back to you.
Looks like the exodus of companies coming out of Russia is still continuing, Catherine. Thanks for that. All right, for more news and analysis on the markets, be sure to tune in to Catherine Murray on the Buck Stops Here.